Now, we've gone over some of these statistics for the month of July for Sonoma County sales. That's in the beautiful wine country. Now we're going to look at what some of these numbers mean. Now, the median price has been dropping like a stone for the last 3 or 4 years. Every time we check it, it's down 20, 25, 30%. The good news, it's only down. Don't you love it in this kind of economy, folks, when people tell you the good news, we're only down a smaller number than we were the month before? But that's the case, and this bodes well for the Sonoma County marketplace. We are only down just over 11% from last year for the median home price. This indicates to me that we're starting to see a spread of the sales throughout all of the price points. Instead of just being very narrowly focused below, say, 300,000, we're starting to see sales that are starting to creep up. Hence, the median price is not dropping that much. So that's a good thing. Now, the REO market, though, is devastated. It's not anywhere near what it used to be. Okay, the sales, are way, way down. Now, the median price, that's down about 20% over last year at this time. All right, so you can still see that most REOs are kind of bargain price, so hence they're at the lower price points. Now, there's people were talking about there might be, some sort of a price creep for REOs. Well, they're down 20%. So we're not seeing the REO market maybe infiltrate through the mid and upper end price points. However, we are seeing a lot more REOs, but they're not really, you would think if they were going through the marketplace now, the REOs, that you would see that median price be buoyed a little bit, not go down as much, but it's down 20%. So that's indicative to me that we're not really seeing those sales yet. Now, that just could be that those price points between 500 and a million and $1 million and above are slow to begin with, which they definitely are. Now, the short sales, the median price is down 25% over last year. That's interesting because usually you're paying a lot more for for a short sale than you are an REO. But in this case, we're starting to see that median price for short sales dropping down. So we can see that the short sale is pretty much concentrated in the lower price points because we had a lot of first-time home buyers getting into that market and really getting highly leveraged and walking away from their properties. Now, so what do all these numbers mean? What in the wide, wide world of sports is going around here? You probably remember that from Slim Pickens back in the old Blazing Saddle days. Now, it's really interesting to know who is controlling this market. Is anyone controlling this market? In my humble opinion, not that of Keller Williams, but in Mike Kelly's opinion, I think the banks are really controlling this market because let's look what's going on. The REO marketplace, very little inventory right now. When they hit the market, they are gone like that. Short sales, we saw a drop in the short sales over last month. Last month was the first time we went over 100. Now we're seeing those short sales drop back to 86, about 14% off. So we're not seeing a whole bunch of short sales happening. Got a whole bunch in escrow, but they're not being taken care of on the other end. It means they're not closing. So we have it definitely, they're not really doing a lot of short sales. Modifications, you hear a lot of talk about it. You hear about a lot of companies that are going to modify your mortgage. We're not seeing it. We don't see it on our side. We're not hearing our clients saying, Mike, I'm getting my loan modified. I'm doing this, doing that. I had a gentleman call me on my radio show. He's supposed to get a $150,000 principal reduction on his loan as a modification. He's been waiting 6 months. Why do you think it takes so long? They always tell you this with modifying companies. Well, they charge you $3,500. If they could do it in 2 weeks, folks, you would probably say you're charging too much money. Now, a lot of them never get it done to begin with, but if they take 6 months to do it, they can always go back to you and say, hey, guess what? Yeah, I know it took 6 months. We were working really hard for you. We couldn't get a modification. You're stuck. Thank you very much for the money. So be very wary, please, of modification companies. Now, the appraisals are getting very hard to do. We have this new entity called the HVCC. This is a third-party clearinghouse for appraisers because the lending industry and the legislature thought we were all too close to the appraisers. So now the appraisals are being taken care of out of a neutral third party that orders, that the appraisal through this third party company. That way the appraiser never even talks to the mortgage broker. They cannot talk to each other anymore. However, they come talk to the realtor. Isn't that a little weird? So now they're talking to the realtor, so the mortgage guys are talking to us, and we're talking to the appraiser. So what's really happened? Well, the problem we're seeing is we're having a lot of appraisers coming from out of the area who don't know our prices at all. Hence, we get appraisers that are all out of whack, all right, and things are falling apart left and right. Underwriting. Every day we turn around, there's a new underwriting guideline. My friend Pete Philippi, who's been on my radio show for years, it drives him nuts because every time they think they have something approved, guess what? The lender comes back and wants either a further review or they've got a more restrictive underwriting guideline. So yeah, you guessed it. Who's controlling the market right now? The banks. The banks are controlling the appraisals, the underwriting, the interest rates, which are very good, by the way, 5.25% as of about the middle of August. And they're also controlling like the appraisals, and then they're controlling how many products will be delivered as far as REOs, how many short sales made, and if they'll modify your mortgage. Because guess what? If you knew you could modify your mortgage like that, if you knew you could do a short sale like that, if you knew there were a ton of REOs coming on the market, you would have been looking at a normal seller. All right, you'd be waiting for, you would quit making your payments, you'd try to get a better rate, get a principal reduction. So the banks are aware of that. So everything is being metered out very gradually. So that's kind of the state of the marketplace currently in Sonoma County. We'll have another wrap up in the fall market to tell you how the summer was, but right now sales are down. We're not seeing the big numbers we had. The biggest month we've had so far in 2009 was back in October. And that was like over 650 units. We just broke 500. This is prime time, you guys. You should be buying houses right now. People should be selling houses. Inventory's way down. If you're a seller under 300,000, good luck because there's a lot of competition. But if you're a buyer between 5 and $1 million and the million plus, you can get a good deal. I'm Mike Kelly. I'm with Keller Williams. You can contact me at 707-322-8503 or 800-959-7244. And don't forget to listen to the Real Estate Hour, heard every Sunday morning, 9 to 10 o'clock Pacific Standard Time, 9 to 10 o'clock Pacific Standard Time on KSRO 1350 AM. You can go to www.ksro.com and listen to us online. Thanks.